Hello everybody, welcome back. Nice and early this morning for me, and again, this is nothing. This is just I've been up for hours, obviously. Right, so we're going to talk about a few little bits on the Bitcoin chart on a daily, and a monthly, and a weekly, short term and long term. Worst case scenario versus what I think is most likely to happen in the short term. So a bit of an overview, different things, and I've broken it down to make it simple to see and understand. So I assume most of you use Bollinger Bands, and if you don't, you probably should. It's trading 101 really. It's pretty simple stuff. We have the outer band here, which is moving averages that expand with volatility. We have a center, which is a 20 moving average. We're on the monthly chart here, so this is a 20 monthly. And the general rule of thumb is if you're above the centre, you're 65% more likely to stay above it. The odds aren't enormous. You know, if you were given a 60% chance of surviving something, it's not, you wouldn't feel very confident in that, although the odds are still in your favour, right? So we've come down now to test the 20 monthly. That's where we are. So the odds is that we'll stay above the 20 monthly, and even if we don't, we should have a reaction from the 20 monthly. So that is first thing we're talking about, and again, this is a monthly. So a reaction could simply be the reaction we're getting at the moment, a little tiny baby bounce. This was 2019, so we did a massive rally when the bull market began in 2019, straight through the Bollinger Bands, no problem at all. It rallied an incredible amount, very, very fast, and then had to consolidate for longer because it was just too crazy. It was just too crazy for it. And what happened here on the monthly is 1, 2, 3 moves down, a little green candle up, not much. 4, 5 moves down, but we tested monthly Bollinger, monthly Bollinger, monthly Bollinger, monthly Bollinger, and it took 3 attempts to try and break down from it, to basically say, nah, we're not going to do it. We are going to go up today. We are going to go up this month. We are going to recover. And it was only this time around here, which was the March crash, because of outside forces, that basically crashed the world, because of the old virus, basically, that brought it down. It was swiftly brought back up, but obviously, as we all know, that everything went up. It went up to a large extent, because the stock markets and everything's been propped up, So this is prior to the dump, anyway, when markets weren't being manipulated. But before then, the centre of this Bollinger Band held okay, even in a very long, prolonged downtrend of about 6 months or so. It was pretty nasty, because this was great time, and this was boring time, and that's in many ways, this has been the largest amount of Bitcoin and crypto trading, active trading, really, for me. This was pretty easy stuff, really. I mean, like I say, anyone could make money in that market. I think this is also part of the problem that people are facing now, which is that you're going to have to actively trade the market if you want to make some money out of it, which is what I suppose all of this area was. So it requires a bit of attention to detail if you want to make some money through spot trading, and obviously derivatives. You need to know how to trade really to do that effectively. So yeah, the Bollinger Band Center has been tagged. You'd look for a reaction. Now we've seen this 3 months, 4 months. We were waiting for a reaction, and we did finally get one on the 4th month. And it probably would have continued slow and surely if it wasn't for the dump and then the money printing. So that's number 1. And number 2, if we go to the daily here now, so we'll go to the daily. We'll move that out of the way, and simple Bollinger Band stuff. You're more likely to see price action take place within the bands, and this is a much greater extent, to the tune of 95%. So 95% of candles close and price action is inside a Bollinger Band. Now obviously we're below the center in this instance, which means that you're more likely to stay below it by the tune of 65%, but you're also more likely to receive candle body closures inside the band. So I'm not suggesting that this comes up to touch the 20 daily. It could, and remember the 20 daily is in a downtrend, so every day that goes, this is less and less and less. And obviously the bands are expanding as well, which means that the bands could be looking like this. So basically, the price action, although it can come down outside of it, it's likely to close within it. We recognised last night that yesterday's candle body was born outside of a Bollinger Band. This is kind of rare, really. This is what you get in extreme bullish or extreme bearish scenarios. Even in the most bullish times for Bitcoin, we weren't ever really making candle bodies outside of Bollinger Bands. They would rarely close and open outside of Bollinger Bands. It was kind of rare that would ever happen. It does happen. There's a closure, there's a open and close outside of a Bollinger Band, but then swiftly, gets reabsorbed into the bands and surfs the outer rim. This is when it's really bullish, but you can see the wicks just want to be brought back inside the Bollinger Band. It's Bollinger Band strategy, pretty basic stuff. Price action statistically 95% of the time is going to take place inside the bands, and if we get closures outside of the bands, you get sucked back into them, and that's where it all happens. Again, look, the bands are only here, so this does mean that it's more likely that we get sucked back into the band, even if it's just to a small extent. We'll get sucked back into the band. So we've got a 20 monthly moving average that we could potentially have a small bounce from. Plus, we're outside of a band again, second day in a row that we've been born outside of a Bollinger Band, wants to be sucked back inside. And this is 95% more likely that we get sucked back into the band, even if it's just to a small extent. The monthly is only a 65% chance that we stay above it. So, there's two aspects of Bollinger Band strategy for you. And if we just go over to the Bitcoin chart on HyperTrader here, so there's a lot more mess going on here. We just did yesterday tag the CME gap, right? So I'm sure you know about CME gaps, so I won't bore you to death with them. If you want me to explain them on another video, I will, but I'm sure you probably know what they are. But they are a thing, and they were something that was more relevant in the past when we basically messed around within a certain range. CME gaps would be filled all the time, and it was like a prophecy, a prophesized event. And now you'll start to hear that again, because we're heading lower, and there's CME gaps which were never filled because we were so bullish. And so we've got CME gap got filled, and a lot of the time these prophesized events would be filled, and then you'd get a nice reaction from it because everybody's looking for that area. Fill the CME gap, let's bounce from it. So there we go, dipped our toes into it. I mean, you don't have to fill the entire gap from the top to the bottom, you just need to touch it, tag it, there you go, it's done. And so that's another reason for a short-term bounce, right? So there are three things that could offer short-term upside. And if you were to think about bouncing from this zone, going into back into the Bollinger Band, where are we likely to be rejected? Well, since the downtrend began, we've found heavy rejections on the 10 exponential, which is this orange little band here. So it's quite a dramatic state of affairs, really, because it does show how bearish it is. Every tag of this, which is normally one of the most relevant on an uptrend, has become pretty relevant on a downtrend. 10, 10, 10, 10, 10, a small bit of price action above the 10, and then 10, 10, 10, 10, 10, 10, 10, 10, 10, 10, 10, all over the place. The 10 is the one that's getting it. So it would be reasonable to assume that as this moves down, which it will be moving down quite fast because it's a 10 exponential, then if we do get sucked back into the Bollinger Band and we do have an okay reaction, it's there that we will find the rejection back down to probably lower lows. Not massive lows, but lower lows, because in order for this to really form some kind of divergence, we do have to have higher lows on this RSI and lower lows on price action. So we are kind of, even with our most bullish interpretation of this, other than a bullish engulfing candle on the monthly chart, which would suggest V-shaped recovery, which is a possibility, but something that can only really be accounted through price action rather than RSI divergence, MACD divergence, which you're not going to get any of that until we see some lower lows form. And I just mean don't have to be ridiculous crash lower lows, but they would have to be lower lows. That's in the short term. We are looking for a little bit of upside, but it would only be much. 10 exponential today is coming in at 39,000. Tomorrow would be about 38,000, and roughly at this kind of steep direction, we're probably looking at about $700 or $800 a day downtrend of resistance for this 10 exponential. So bear that in mind. I think it's likely that we will come up to test that 10 exponential at some point relatively soon, but what price that would be at the time is well, it's debatable because it changes every day, roughly at this kind of steep angle, roughly about $700 to $800 a day. That's quite dramatic, really. I mean, it'll tail off with price action tails off. It might even go horizontal, but at the moment it's not that at all. It's like a 45-degree angle. It's pretty nasty stuff. So yeah, we're looking for a bounce on this, and I think the altcoins will also bounce from that as well. Because if we go over to, I'll open up a new chart because I want to go back to this basic chart for Bitcoin in a minute, because I want to show you one thing which could, signify an enormous crash basically over the coming months, and something to look for. But before that, we'll just have a quick look at the Bitcoin dominance chart. And the reason I think that altcoins are likely to see some kind of extreme reaction for a Bitcoin bounce would be this. And again, this is just in the short term. So the Bollinger Band, again, very simple stuff on the Bitcoin dominance chart. We found rejection on this when the alt season began. So it's an obvious trade, Bitcoin dominance coming up to a mighty high, and a mighty high over here. So we went into altcoins hard and heavy in January and absolutely destroyed the market. We were having a great time. This was the easiest time to be in crypto. After Bitcoin's run up, and then basically just making serious cash for altcoins for a very long time. So now what we see is we're coming down to this 40% dominant zone, which historically is actually marked more or less the bear market beginning of the last bear market, and also a time to be relatively skeptical about what this chart even means at that point. But we also have the 20 weekly being the area of resistance. Bang, 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 all the way down. Big, massive bounce, bang, straight tag on it, all the way down. 2 weeks closed above it, bang, 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 all the way down, and then bang here. So we are feeling some bounces for Bitcoin and altcoins especially today already. But what I'm trying to get is that when Bitcoin pulls back, and if we hit the 20 weekly on the Bitcoin dominance chart like we did yesterday, altcoins will get bigger bounces just by default, because that's basically what this means. They pull back to a larger extent, but if you're looking to try and get clever and buy into a bounce, some altcoins will serve you much better. It's a kind of a strategic and potentially maybe overcomplicated way of playing the Bitcoin chart for spot trading. If you're looking to do derivatives, you don't need to do this because you just add some leverage, don't you? But leverage is deadly for most people, so I wouldn't really say that that's a great idea if you don't know what you're doing, or if your risk management is obsolete. And for a lot of people it is. They just can't do it. So we're looking to trade Bitcoin almost like as a proxy with the use of altcoins, which again can be overcomplicated and not for everybody. But so altcoins likely to bounce much larger than Bitcoin, and if we do get a bounce next week, which I think we will, dead cat bounce possibly, altcoins, you could see some altcoins rally by 20, 30, 40, 50, 60%. Now, that could happen, and that would obviously be like the largest amount, and some of these small cap coins will probably do that. A 60% bounce, walk in the park, do you know what I mean? No problem. But those bounces probably should be sold given the overall structure of the Bitcoin chart. Right, the last thing I was going to show you was this. So this is what we have to think about in terms of being extremely concerned for Bitcoin. We'll go to Bitcoin Weekly, and this is the Ichimoku cloud we're going to look at this time. So, when you close below a cloud, it's no massive deal. It's not a good thing to do, but it's not a massive deal closing below a cloud. But it does mean that we have got one component to three components of a short signal, which could indicate, in this instance, because with the cross of the conversion baseline took place above the cloud, it wouldn't be a trend continuation, but it would mean a big move. And because we're looking at a weekly, a big move could be 20, 30, 40, 50%. It could be massive, because weekly charts provide the biggest moves. So we've got the cross, which is one thing. We've got a closure, which would appear to be almost guaranteed below the cloud. This portion of the cloud would need to flash red. So it would be a portion of the cloud going red, and that would happen when these two outside areas of the cloud cross, and you would make a red portion of the cloud. So there's 4 components to this indicator for the big short signal. That's what it would be. We've got 1, we've got almost 2, probably going to be confirmed by Monday. 3, so we've got 3 components of this pretty much in the bag, really. I mean, this isn't guaranteed, but I think it's almost certainly going to be. This hasn't closed, but it does not look like it wants to suck itself back inside the cloud. So we've got 2 that are about to be confirmed tomorrow, but this cross has definitely happened. So 1 guaranteed, 2 in the pipeline, and the 4th thing that we look for is this Chiku span. So this is it's called a lagging span or a Chiku span, and it closes where the price action closes at the time. So it's 26 periods behind price action. So if you just have a look at where we are right now, that's where the price action is, 35,600. That's exactly where the Chiku span is going to be. It's just in this candle body here. If this Chiku span closes below the cloud, and we have a red portion, we have a cross, we have price action below the cloud and the Chiku span, that is a short signal which plays out more often than not. And because that would be on a weekly, it would offer quite a large move. Like maybe a massive dump or a crash. Okay, massive dump or a crash is basically what it would mean. But we've not got it yet, so we can't play a signal that's not yet been generated. We wait for a signal to be generated. And me personally, I wouldn't be looking to play the dump. I would be looking to buy essentially the bottom, which would likely take place shortly after that, because it would be such a significant move down that the lows would be so low, and the move would be so dramatic that it would almost certainly mark almost the exact bottom, if not very close to being the exact bottom. And we are talking, like I said, potentially 50%. So we'll measure it from wherever the Chiku span may close from. So we could measure it from here, 50% from 31. We would be looking at areas of about 15,000, right? But the thing I was going to refer to is that obviously the Chiku span has to close below the cloud. So at the moment, this week, it would have to close below 22,000. Next week it would have to close below 26,000. The week after that it would have to close below 30,500. The week after that is more or less the same, and the same after that. Then a few more weeks later we just need to close below 33,400. That's the same for about 4 weeks. And then after about 10 weeks from now, 10 or 11 weeks, we only need to close candle bodies below 35,700, and then as the weeks unfold, more or less around 36,800. So every week that goes by, or every other week that goes by, incrementally, this signal could be generated at higher points, which basically means that if Bitcoin can't pull its socks up over the next, well, I mean, incrementally every other week, it has to be higher than where it is right now. It can afford to be this low now, and it can afford to be this low for, well, quite a few weeks, maybe about 3 to 4 weeks. But if we start closing candle bodies exactly where we are right now, in about a month and a half, that signal will be generated, and that mega dump is very realistic. Well, that's 10,000, but it's a very realistic possibility, because it's a signal that plays out more often than not. So that's worst case scenario. I would be looking for the Bitcoin crash that people are talking about if this were to happen, but it's not on the cards right now. It's a signal that we can look at and we can wait for and we can anticipate, but it's going to be generated, at much lower prices in the short term than where we're at right now, and but over the next couple of months, basically 2 to 3 months, we can't afford to be at this particular price action. This is not where we want to be. If we're still here or lower in 2 months, basically that signal will almost certainly be generated, and I would be looking for the major dump, the major crash. Something like this that we saw in May would happen at this price or lower, wherever the candle body would be. So the crypto dump, the massive crash, the super dump, is a likely possibility, but only under this specific condition. So that doesn't need to scare the pants off you right now, because like I say, we can kind of get a handle on that. That's okay. That's something we can look for and wait for, and it'll take weeks and months for us to write that in as, you know, a more likely scenario. At the moment, it's not a likely scenario, but it's something that we can look at and focus on and work out. You know, is it more likely, you know, 2 or 3 weeks from now, as this cloud bottom gets higher, and price action obviously can afford to be where we are, but in about 3 months, if we're still here, then we'll get it. We'll get the dump. We'll get the crash. And again, it's all going to be generated on weekly closures. Right, so that's a nice way to start your Sunday. I appreciate that. But in the short term, it does look like we're going to get sucked back up into the Bollinger Band over the next few days into next week. And again, we're focusing only on the Bitcoin chart here. We're not looking at any of the external forces which could implicate further downside just by default, like, you know, Dixie, outside, you know, like world events, Ukraine, all that lot. You know, maybe a new virus which has learned to use machetes. Yeah, anything is possible these days. But we're just focusing on this chart, and this chart on its own suggests a little bit of relief. And when you look at the Bitcoin dominance chart, a little bit of relief for, you know, a majority of altcoins, but some of them will amplify what, you know, the market's moved by, you know, 2 or 3, 4 times maybe. But no altcoin is created equal, and you want to be very delicate while treading into altcoin waters at the moment, and focus mostly on what's going on with Bitcoin, because Bitcoin, it will and has, as we all know, dominated the downtrend. It's all Bitcoin's fault. Let's blame Bitcoin, but it's not really Bitcoin's fault. But I mean, altcoins will amplify Bitcoin's downtrend. We all know that. We've known that since forever. So I'll leave it with you there. I hope you enjoy your Sunday. But I do think some light relief is almost guaranteed at this level, just through standard Bollinger Band practice, really. But let's be careful. Anyway, thanks for watching, guys. Hope you have a nice day. Take it easy.